This is Matthew Cratter from Trader University, and today I want to talk about Jerome Powell's comments on Bitcoin as digital gold. I've been getting a lot of questions about this, and I think it was an interesting speech because there was a lot of what people call Freudian projection or psychological projection. This is the idea if, for example, maybe you're a very angry person, and rather than acknowledging that to yourself, you go around and accuse everyone around you of having an anger management problem. So let's start with a quiz. If you heard just fragments of what Jerome Powell was talking about, and you heard him say it's not backed by anything, it's not useful as a store of value, I think the first thing you would think of, at least what I would think of, would be the US dollar, not Dogecoin, but the US dollar. Obviously, the US dollar hasn't been backed by anything for many, many years. Nixon severed and ended the convertibility of US dollars into gold back in August of 1971. So US dollar is not backed by anything. The US dollar is also not useful as a store of value, especially if you hold it for significant periods of time. This is really an amazing chart that shows the purchasing power of $1 US since 1635, so even before the revolution, all the way to today. If we can scroll in here and take a look at what it looked like, what the US dollar has really done since 1971, roughly, call it about here. We can see that the US dollar has not been a good store of value either. And everyone knows this. If you've lived long enough, you know that things always go up in price. Everything ends up costing more. And this is because fiat currencies lose their purchasing power over time. Here's another great chart of the purchasing power of the US dollar and how much it's fallen since the Fed was created in 1913. So that's the quiz. Obviously, Jerome Powell's not talking about the US dollar, but it does almost seem like he's projecting, talking about something that's not. I think especially if you're a central banker, you should be very careful when you cast stones, especially if you live in a glass house. The US dollar is not backed by anything, not a useful store of value. But what Powell was obviously talking about, he was talking about cryptocurrencies, which he says he prefers to call crypto assets because he doesn't want to think of them as being currencies. If you're finding this video helpful so far, I'd encourage you to hit that like button and hit the subscribe button as well, and maybe tell a couple friends about my channel. So these are Jerome Powell's full comments from yesterday. Crypto assets, they're highly volatile, see Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation. They're also not particularly in use as a means of payment. It's more a speculative asset that is essentially a substitute for gold rather than for the dollar. And I think with crypto assets, the public needs to understand the risks. The principal thing is there's the volatility. There's also the outsized energy requirements for mining and the fact that they're not backed by anything. So he's really obsessed by the fact they're not backed by anything. I suppose the US dollar is backed by the taxing authority of the IRS and the US Treasury. But other than that, and it's obviously backed by the military power of the US government. That being said, the way money works is, especially money as a store of value, this is something that emerges more organically. And everyone realizes now that the US dollar is not a good store of value. Obviously, it's a very efficient medium of exchange, but it comes back with all of these problems. It's funny to hear Powell talk about this because if you've been following my channel for any period of time, you know that these are all the common objections to Bitcoin. And these are really entry-level questions. If you're worried about the energy usage of Bitcoin, if you're worried that it doesn't have intrinsic value or it's not backed by anything, they're good answers for all of these things. And I can go into a little bit now, but also check out the other videos on my channel. So it's funny to see a central banker. This is one problem when you put a lawyer, investment banker, and private equity guy in charge of the central bank. He doesn't even have any understanding of money, and this is one of the great ironies. When people talk about the energy requirements of Bitcoin in particular, they're forgetting that maintaining the US dollar as the world reserve currency, comes with a lot of very high energy requirements as well. It requires us to go to war and spend trillions of dollars bombing countries when they decide, for example, not to use the petrodollar, but instead to sell their oil for euros. Just the Iraq war, not counting Afghanistan, all the other wars, has cost roughly $2 trillion, and I think that's probably too low of an estimate. So this is what proof of work looks like. This is what the energy requirements look like for the global fiat system that's based on the U.S. dollar as a world reserve currency. I talk more about this in this video where I talk about Bitcoin's environmental impact, carbon footprint, etc. But the thing, when you're thinking about Bitcoin, you can't compare it to a perfect system that exists in the sky somewhere. You have to compare it to real world alternatives. And the carbon footprint, the energy requirements of the current fiat system, with all the investment bankers' private jets, the giant skyscrapers, the financial districts, all the lawyers and the accountants, not to mention all the wars. This is the energy requirements of the fiat system, and it's a very dirty, very corrupt and dirty system. In terms of the volatility, this is another thing that we've talked about and that Jerome Powell criticizes Bitcoin for. Well, the US dollar is a melting ice cube, and it melts fairly steadily. It's not volatile because it's melting slowly. The problem is the Fed is in a position now, as we've talked about, where they have to print and print and print. They have to do basically QE infinity. And when you increase the money supply by 25%, as it's done in the last 12 months, you really begin to make this ice cube melt faster. But I think Powell confuses volatility and store of value. Obviously, if you want to send a quick purchase and Bitcoin's moving around, it's not good for that. But in terms of a store of value, volatility is not it's not really what you should be looking at. As we all know, there are many currency pegs that are not volatile at all until they break. This is what Nassim Taleb talks about, for example, with the turkey problem. The volatility of a turkey's life is extremely low. The days don't change at all. The farmer feeds them every single day, and then the day before Thanksgiving, the volatility of his turkey's life and the violence goes way up. And this is very similar to what manipulated systems like the U.S. dollar look like. It's not volatile, but it does lose purchasing power guaranteed over time because more and more dollars are being printed. Quite often, assets that are volatile, that have a clear path to much higher market caps and to world domination, they're volatile because their beginning market caps are relatively slow. The world has trouble understanding them. They're big inflows in and out. We saw this with Amazon and Apple for the past 20 years. They were quite volatile, especially in the late 90s and early 2000s. They've become a lot less volatile over time. And as they've become less volatile over time, they have begun to function as really good stores of value. If you stored the products of your labor, the fruits of your labor in US dollars, starting in the early 2000s versus in Amazon or Apple, we know which one was a better store of value. There was volatility as the world struggled to understand how these companies would make money and really failed to understand the impact that global e-commerce and Amazon Web Services and the iPhone obviously would have. But today, a lot of that volatility, most of that volatility is in the rearview mirror, and these two stocks function very well as stores of value. We know this because most people in their retirement accounts own a lot of stock index funds, and one of the biggest chunks of those stock index funds are the FANG stocks, including Amazon and Apple. So beware of things that are not volatile. Bernie Madoff's investment returns for many years were very, very steady. He would make something like 20%, 15, 20% every single year with zero volatility. The way you have zero volatility in the real world is you have an artificial environment that's being manipulated. Either it's fraud, just like Bernie Madoff, or you have a lot of behind-the-scene machinations to try to keep the current system going. And so you should always be very worried. We all know that that life is volatile, that the real world is volatile. There's storms, there's bad weather, bad things happen to people, etc. If you're living a completely non-volatile life, it probably means you're living in a plastic bubble or a glass cube somewhere. So this is one great investment principle, that volatility should not scare you off. What it means is you may need to size the position slightly smaller, but all great ideas, including all the original internet stocks, were very volatile until they became completely dominant. Bitcoin's volatility has come down over time as well, and it should continue to decrease as the market cap goes up. This is very easy to see. For example, when Bitcoin's market cap was 100 million, if you have $10 million flowing in, has a huge impact on the price. If that $10 million is flowing into Bitcoin or flowing out of Bitcoin, if the market cap is $1 trillion or above where it is roughly now, $10 million, $100 million has much less impact on the price. This is something similar we saw with the volatility of Amazon and Apple. Pomp also makes a good point here, critiquing, saying that Bitcoin is not really used as a means of payment. It actually is, especially in a lot of countries around the world, people using the Lightning Network. The Bitcoin network is going to do nearly 50% of the transaction volume of Visa this year. That's just an amazing statistic if you think about it. Right now, Bitcoin itself is valued more than the combined market caps of Visa and MasterCard as well. So that's a good answer to another of Powell's objections. The real problem, of course, that central bankers have with both gold and with Bitcoin is they can't print any more of it. They've been able to manipulate gold really well by issuing a lot of paper gold, a lot of paper assets, and doing various manipulation on Wall Street. This is going to be much more difficult to do with Bitcoin. If you try to suppress the price of Bitcoin by dumping a lot of paper Bitcoin into the market and artificially increasing the supply, you drive down the price of real Bitcoin, which allows people all around the world to accumulate the real thing, the real BTC, at much lower prices. In addition, gold has always been, certainly since 1933 when the U.S. government confiscated all of its citizens' gold, gold has been mostly sitting in government central bank vaults. And as such, it's very difficult to move. It's very difficult to know how much is there. Bitcoin is a very different situation, much less easy to manipulate. It's easy to verify how much there is. We don't have to rely on the government saying they have a certain amount at Fort Knox, for example. And it's very easy to store as well. Paper gold really came on the scene simply because people like the convenience of ETFs and not having to store gold in their basement, for example. Bitcoin is much easier to move around and to store as well. And so this is why I think the analogies, the government's going to have much more trouble manipulating the price of actual Bitcoin. If they try to suppress the price, they enable other central banks, other countries, other people around the world to accumulate larger and larger amounts and lock it up. And what they risk is a really large short squeeze in Bitcoin. Bitcoin is the best store of value ever created, in spite of what Jerome Powell is saying. And Bitcoin will continue to take market share from other stores of value like gold, real estate, and stocks. I see Bitcoin becoming the final settlement layer for the global financial system in the same way that gold was the settlement layer back 100 years ago or so, when there were transactions that happened between banks, or call it 150 years ago, because we really had the rise of paper certificates backed by gold. But before that, to settle up accounts, you would actually move gold back and forth between banks as sort of the final irreversible settlement. Gold has no counterparty risk if you own the real thing, just like Bitcoin has no counterparty risk. If you have it, you possess it, and there's no credit risk or counterparty risk. And this is why Bitcoin and gold in the old days, before we lived in a digital civilization, and Bitcoin today is going to be this settlement layer for the global financial system. It's not going to completely replace fiat currencies. Obviously, the central banks are all coming out with central bank digital currencies. The U.S. is way behind China in this area, Powell seems to poo-poo it and say there's no rush. Obviously, there probably is a rush, but as Bitcoiners, we don't really care if the U.S. government messes this up because it's still good for Bitcoin. So the government can still force you to pay your taxes using fiat currency, using U.S. dollars, but it cannot force you to store your wealth in U.S. dollars. And I think we'll begin to see something similar that happens in a lot of countries in Africa, countries in South America, Venezuela, Argentina, Brazil, where you try to store your wealth in something concrete that has value. Maybe when you get your paycheck, you buy a motorcycle because you don't want to put your money in the bank where there's this very high rate of inflation and loss of purchasing power, or you try to get your hands on some U.S. dollars, and then you keep those U.S. dollars under your mattress. And then when you want to buy something, you just convert a little bit to fiat currency, to the local currency to buy it. And I see people doing something similar in the future with Bitcoin, where you'll store your wealth in Bitcoin. If you need to pay some taxes, maybe you sell off a little bit of your position and you send the U.S. Treasury a check made out in U.S. dollars. And so this isn't really something that can be legislated. People will gravitate to the hardest form of money, the form of money that cannot be debased. And this is one reason that gold was so important historically, because it has this somewhat limited supply. And this is why Bitcoin will function as digital gold in the future. What happens is if you choose to store your wealth in a softer form of money, let's say there's one person who stores their wealth in Bitcoin, another person who stores their wealth in US dollars. After a few years, we know which one becomes richer. And so this is how the market works. Even when you have manipulated markets, people will gravitate towards the best store of value. The best store of value over the past 10 years, besides Bitcoin, has obviously been the NASDAQ or tech stocks. And they've really begun to function as a store of value. A lot of people don't understand that currency as a store of value, this is something that is not, if you're a chartalist, you think that everything comes down from the government and the government gets to decide what is money. But what actually happens in practice is people seek out scarce assets to store their wealth in. This is why billionaires buy apartments in Manhattan and never visit or never stay there. It's really just a store of value. Real estate is a store of value. Bitcoin, a lot of people think it can't scale, but it actually scales beautifully. Even though it can only do something like 7 transactions per second, those transactions, which will be at the final settlement layer, can be billions of dollars or even trillions of dollars each. So you can have this batching that occurs, and then everything settles on the final settlement layer. Lightning Network obviously is very important too, and very impressive. These second layer solutions that are built one layer above the primary layer of the blockchain. These can be used, we've talked about Jack Mallers' Strike. These can be used for buying a cup of coffee with Bitcoin, though obviously as Bitcoin becomes more and more scarce and more valuable, it doesn't really make sense to spend it. Maybe you could spend a little bit of it, but this is almost like buying a cup of coffee with a gold coin or a fraction of a gold coin. It just would be a crazy thing to do. It's much better to use your dirty fiat money for these kind of purchases. Bitcoin continues to take market share from all the other stores of value. You can look at any chart in terms of Bitcoin as the denominator, and you'll see something similar to what we see with gold here. On this chart, as gold strengthens against Bitcoin, the chart moves up. And as Bitcoin strengthens against gold, the chart moves down. We can see that holding Bitcoin versus holding gold has been a much better choice over the past 10 years. And another way of saying this is that Bitcoin has been taking market share from gold. If we scroll out, it actually becomes a completely absurd chart that goes somewhere from 700 or 800 all the way down to 3 cents, this ratio. And this is why people like Peter Schiff, who are bullish on gold and hate Bitcoin, they're really betting that this trend is going to somehow magically reverse. And it's not going to reverse. We live in a digital world now. Generation millennials and Gen Z, Zoomers don't care anything about gold, but they all understand digital tokens. They all love Bitcoin. And we're moving, and we're already in such a digital world thinking that we're going to go back to shiny yellow rocks is fairly delusional. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.